please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning and welcome. This is Power Breakfast on CNBC TV18. I'm Mangla Malu. With me in the Mumbai News Center is Anisha Jain. Good morning, Anisha. You know, we kickstart a new week, but as we do that, there are three things you never predict in life. The first one is Bombay rains, can happen anytime. Second one, day 5, a test match pitch, never predict how it will turn. And the third one, Trump. Oh, on Friday, he said that there may or may not be any missiles coming. Saturday, Sunday, he goes ahead and orders those missiles into the world. So never predict what Trump is likely to do. That is the one thing that I've learned. And also never predict how the markets are likely to react to that. Because the US markets, they did not react to that on Friday. But now that the missiles have happened, the Dow futures is actually indicating a gain of close to 130 points. The Asian markets are more or less in the green, and the SGX Nifty down only about 25 points. Though for our markets, it'll be Infosys that'll be most important today.
Oh yes, a lot of macro and micro cues lined up for the day, and as you said, actually it looks like the markets have actually taken everything in their stride. They've learned to take all that unpredictability in their stride as well. The major headline coming in from the globe is the US attacks on Syria, and that's the reason it seems that the Asian markets are losing steam, because when we started off the show, Nikkei was trading with a gain of 0.25%. That has inched around a slight bit lower, up around 0.2% now, while the Kospi has moved into the red. Let's look at what Hang Seng is doing right now, because that also indicated that the start would be in the negative. So let's bring up the rates as far as Hang Seng is concerned. That index was down about 0.7 or 0.75% when we started off. Other than that, let's look what SGX Nifty is doing, because that was suggesting a downtick of 50 points when we started off trade. So let's take a look what SGX Nifty is doing. My guess it would still be down around 40-50 points, so 54 points down as far as SGX Nifty is concerned. But let's just focus and talk about the currency space now, because the dollar index edges up following the missile strikes by US on Syria over the weekend, while against the Japanese yen, the dollar hovers near 2-month high.
In the world of commodities, oil prices, they edge lower, easing from near 3-year highs following the US-led military strikes in Syria.
From the precious metal space, gold inches lower as the dollar strengthens on relief that weekend strikes against Syria by the United States, France and British may be a one-off event.
Now, let's talk about our own markets. Back home on Friday, the last trade, the market ended in the green in Friday's trading session. So that's 7 straight sessions of a winning streak for our markets. The mid-caps outperformed during the day, but then we saw some bit of decline in the last hour, just an end above the flat line for the Nifty Bank too. But how are Qs stacked up today? Nigel joins in to tell us what to watch out for today. Nigel, morning.
Well, morning, Manglam. As you said, last 7 sessions have been a good run. The Nifty has put on nearly around 350 points on a winning streak. And if you take a look at it, you just rewind a bit to the 23rd of March. Well, you'll say that the Nifty has put on nearly around 500 points. That's a 5% rally. The Nifty Bank is up nearly around 1,500 points. So, you know, it's been a good run. All the way since March 22nd odd. Well, if you take a look in Friday's trading session, the Nifty did come off the high point of the day. So that really should come up for you. The intraday chart, that's not really telling you the picture. We should try to pull up that chart. And as has been the case in the last few trading sessions, the FIs were sellers. The DIs, they continue to buy. And in this month itself, that's really been the trend. The FIs have sold nearly around 3,300 crores or thereabouts. The DIs, they have pumped in nearly around 3,600 crores. So it's been a DI-led rally that we have seen in the last few trading sessions. Well, the FIs, in the futures, they added some shots. In fact, they added 2 shots for every long position that was added. They bought, though, more calls than puts, and they were writing puts aggressively, telling you that they don't expect the market to really drift below that 10,200, 10,300 odd mark. A lot of put writing is what we saw. On the whole, the FIs, yes, they're net short on the index, but the short positions now have come down from around 85% to around 74% odd. In terms of the index options, they've bought nearly around 3 puts. So if things go wrong, there is protection on the downside. And encouraging to see really that they've written more puts than calls as well, telling you that even if we see a bit of a dip, they're not expecting it maybe to break that 10,000 odd mark that we saw a couple of weeks ago. Well, there are a couple of challenges today. One is the global scenario. The geopolitical concerns will continue. Remember, over the weekend we had, President Trump was talking about Syria. There was a target on Syria as well, and that was in conjunction with a couple of other countries like the United Kingdom as well as the French. So we'll keep an eye on that front. The Asian markets, though, this morning, well, they're not opened up with a cut of 0.5%, 1%, or they're more or less flattish the last time I checked. In fact, the Nikkei and the Kospi, both of them are holding mildly in the green. The second challenge is the Infosys ADR. Now, that ended with a cut of around 7% approximately. The street didn't like the margin guidance. And if you take a look at the contribution, you'll see that Infosys has a rather large weight on the index. The weight is at around 5.4%. That's tied with ITC. So keep an eye out on that stock in today's trading session as well. The levels that we're watching on the Nifty, well, the 50, the 100 and 200 DMA. The 100 DMA will be quite crucial. That, in fact, that's the mark we should be looking at in today's trade if we do see some selling. But I was telling you, Mangalam, that in fact we have seen a big rally on the Nifty. Take a look at some of those broader markets. They have given you between 20 to around 25% since March 23rd. So it continues to be a stock-specific market. Also keep an eye out on the rupee, because news that came over the weekend was, in fact, now the rupee has been added to the watch list as well, along with a lot of other currencies. So maybe we could see the rupee as well.
Okay, so it continues to be a stock-specific market, Nigel. In that scenario, what are the other stocks that you're looking at apart from Infosys? That
Infosys is going to be interesting. I don't know whether the numbers were so bad or the guidance was so bad that we'll see a 7% downtake. If that's the case, then I'll be looking at Infosys and also be looking at a couple of other larger names. Because if Infosys opens down with a cut of around 7%, that's going to shave a whole lot off the Nifty. So we'll keep an eye out on Infosys and a lot of other heavyweights, the HDFCs, Reliance, as well as ITC. Besides that, we had some numbers that came out. ICICI Securities, remember, didn't have a great listing. The stock did bottom out at around that 400 odd mark. It's at around 420. On a year-on-year basis, the numbers look good. On a sequential basis, well, the numbers look more or less steady as well. No fireworks there. Group Finance, well, the disbursement growth is something that looked very, very good. That was up by nearly around 20% on a year-on-year basis. Rane Bricks, well, in fact, the margins are there. They've compressed to around 12%. So that's nearly around a 400 to around a 500 basis points compression that we're seeing there. Bansali Engineering, well, that stock has had a dream run. The numbers continue to look good. The top line growth, there was margin expansion as well. So keep an eye on that stock. How much of the good news has been priced in? Fortis, well, that will continue to be in focus. Now we have the bid. Remember, we told you last week itself that IHH, they're going to be putting in a bid at around 160 rupees. That's come about on the exchange. So Fortis, as has been the case, every day, keep an eye out on that stock.
All right, Nigel, thanks a lot for that. You told about stocks, you told us about levels, but the most important cue, Trump's tweets. You want to hazard a guess on what he's going to say? All right, so we'll keep an eye out on that. With that, let's move on to some important opinion coming in from Jonathan Garner of Morgan Stanley. Speaking exclusively to CNBC, he says that they have cut their index targets across the board and geopolitical issues will indeed continue to impact.
Okay, that's Jonathan Garner saying that the geopolitical risks are going to impact the vulnerable markets. But apart from that, another weak cue that is lined up for the Indian markets today is the trade deficit number. Because remember, the trade deficit widens and the export number has also disappointed. Lata is here to decode that data for us. Lata, how do you see those numbers?
Well, they do look a little disappointing. One is, of course, the trade deficit at 13.7 billion. Anything above 13 is a bit of a bother, because if you looked at the amount of software exports, non-trade, non-merchandise trade inflows, we can't manage beyond 13 without getting into slightly risky terrain. And the other thing bad about the March numbers is the export number. Export is down 0.6%. I mean, year on year down at a time when our destinations are doing very well because of the rise in commodity prices. I mean, Middle East is one of our destinations. It should have done well. So somewhere we are losing out. And I'll come to that in a minute. Imports, they have gone up by 9.8%. So that is what is creating this huge trade deficit worry for the year as a whole. Now that I'm giving you March data, I should be able to give you April, March, the full FY18 data. Exports are okay. I mean, they are up by about 7%, I think, 7.2. But look at imports, 19.6% up. And trade deficit is coming in at 156 billion. Now, divided by 12, that's an average of 13 months. In the first 6 months, we averaged 11 billion. That means in the next 6 months, we are averaging 14 billion. That is the worry. If we get on to this, then next year, that is the current year, we should be going with a current account deficit of about 2.6% of GDP, which is a spot of bother. Just one more word. I mean, obviously in March, what's not helping us at all, that there is practically no jewellery exports. It's negative, so clearly LOCs or LCs are not being opened. We have not done too badly in pharma and inorganic chemicals, but we are not doing well on textile garments, ready-made garments, and that's a huge labor in inputting sector as well. So labor and jewelry, both of them very big labor-intensive exports not firing.
So, Lata, does that open a downside risk given that majority of the previous year oil prices were benign, now they've risen up, and then protectionism is increasing, any which way exports weren't doing well. So does that open the room for a wider fiscal deficit, or rather trade deficit, I'm sorry?
Well, the protectionism, no, I wouldn't come to it, because I don't think we are being hit by that. We are being hit by our own problems. Okay. Either the GST has disrupted supply cycles, supply chains, or it's, individual sectors like jewelry. For me, the worry would be that you are starting with a bad base and you have a higher crude number. Today we are, at $72. Every day we are like, half a dollar more than the previous day. So compounding together, the rupee will definitely feel the pinch, but it's not disaster. I mean, we have such excellent FX reserves that it's a worry. It can become a disaster if we don't check it.
All right.